This letter to the Fed should be a warning signal to all homeowners with considerable equity, especially seniors.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. If there's one thing you may wish to share with any potential reverse mortgage borrower, it is this. Last Monday, October 9th, the National Association of Realtors, the Mortgage Bankers Association, and the National Association of Home Builders wrote the Federal Reserve Chairman, yes, Jerome Powell, and the Board of Governors a letter that petitions the Fed to stop increasing interest rates. Now, why should older homeowners with substantial equity be concerned? Because the letter reveals what few real estate professionals or traditional lenders are willing to say out loud. That is, the U.S. housing market is in a precarious position, and so are home values, and consequently, senior home equity. Homeowners should be reminded of this one truism, that equity is a mere number, an illusion of sorts, until it's separated from the home, either by selling or tapping into the home's value with a reverse mortgage or a home equity loan. The industry players expressed their, quote, profound concern and shared amongst their collective membership that the ongoing market uncertainty about the Fed's rate path is contributing to recent interest rate hikes and volatility. And the letter adds this. This has exacerbated housing affordability and created additional disruptions for a real estate market that is already straining to adjust to a dramatic pullback in both mortgage origination and home sales volume. Yes, it certainly has. But is there really any uncertainty about the Fed's rate path? Now, following the most recent Federal Reserve meeting on August 25th, Jerome Powell cautioned in his press conference, "We are prepared to raise rates further if appropriate and intend to hold policy at the restrictive level until we are confident that inflation is moving sustainably down toward our objective. That further increases of the Fed funds rate may be necessary." Now, it seems the Fed has made their intentions very clear. More rate hikes will be made if inflation is not on a path to their target rate. Presently, traditional mortgage rates have jumped to a 23-year high and are now edging near 8% for the average borrower with good credit. And today's high rates not only have pushed many potential home buyers to the sidelines and decimated home sale volume, but they add downward pressure to existing home values should the economy and the housing market encounter what the letter calls a hard landing. We urge the Fed to take these simple steps to ensure that this sector does not precipitate the hard landing that the Fed has tried so hard to avoid, the trade group said in the letter. The trade groups are concerned that this hard landing in the real estate market would impact home values, new construction, and the overall economy. And the letter notes that, quote, housing activity accounts for nearly 16% of gross domestic product, according to the National Association of Home Builders. Now, if there's one point I can't drive home enough, it is this. What happens in the housing market and traditional lending has a profound impact on older homeowners and the potential outcome of getting a reverse mortgage in the future. In many markets across the nation, home values today, they're still up 25 to 35% higher than their pre-pandemic levels. However, this letter to the Fed tells us that could be changing in the coming year. Now, what are your thoughts? Leave your comments in the comment section below. And if you'd be so kind as to share this video on LinkedIn, I see more and more of you doing it out there, so thank you so much. I appreciate it. I get those notifications. Don't forget we have a YouTube channel where you can subscribe, hit that notification bell, and please hit the like button. That helps improve our ranking in the YouTube algorithm. And each and every week, we bring you the nation's only weekly reverse mortgage news podcast, Heckam World Weekly. By the way, you're going to want to watch. Yes, I said watch, not listen, because we have our first ever video version of Heckam World Weekly podcast. And you can click on the link on the email or go to heckhamworld.com. Let us know what you think about that. Thanks again for watching, and be sure to return next week for more reverse mortgage news, commentary, and analysis that you'll find nowhere else than here at HECM World.